Why do you think the market is ignoring the second, third waves that we are hearing coming about in the region, in this part of the world?
I don't think the market as such is ignoring it. What the market is doing, in my view, is the market prices 2021, and in 2021, most of that COVID is gone. I think it more or less projects the trajectory that we have in our base case. I mean, the virus, of course, after what we've seen from April to June, it cannot completely disappear. We always were of the view that that there are spots in many countries around the world. There will be spots, and it flares up again, and these spots will have to restrict things a little bit more, at least temporarily again. But we compare this with a situation where the entire country is locked, right? So that you can no longer afford. So we're moving from closing entire countries to here and there a couple of spots, but it is still an improvement. And on top of that, you have all this liquidity. So I'm not actually surprised that the markets are not panicking over this.
No, we were looking at some of the findings in your UBS wealth survey too, and it's interesting that it seems as though 2/3 say the pandemic has altered the way that they're thinking about their finances. So I'm curious if you can expand on that and tell us how that's altered the way that you now invest.
There's maybe two things. I think one of the interesting findings in our Investor Watch survey is that, yes, it made actually, in all cases, more than half of the survey participants think about the world and also think about whether they need financial advice. Interestingly, this is more pronounced among the millennials compared to, for example, the boomers generation. I would think this is maybe because the boomers perhaps have seen a couple more of these cycles, also even heavy, very pronounced cycles like financial crisis or 2000. The millennials maybe not quite as used to that, so feel a stronger need for advice. But yeah, we think, or where we agree that the world has changed to an extent is more digitization happening, and some of that is here to stay. Maybe also more, and I wouldn't say deglobalization, but certainly that the trend is not as forceful anymore. And then another important aspect is that the world after COVID is much higher indebted, especially government, as we know. So there's also investment implications on this. At this moment, though, with all the liquidity, we say certainly good ideas, still above average yields, historically speaking, can be found in some of the riskier credits. So yeah, there are answers to this malaise.